Good evening and welcome to Follow the Money, bringing you the latest updates on everything business, finance, the markets, and investment funds. Our top story this week, equities traders had a stellar second quarter, driving earnings for major Wall Street banks. A strong US economy, interest rate bets, and rising geopolitical uncertainty fueled trading activities as banks report their earnings this week. Bank of America saw a 20% jump in equities trading revenue to $1.9 billion thanks to strong client activity in cash and derivatives. Morgan Stanley reported an 18% rise to $3 billion, driven by client engagement in Asia and a constructive market environment. Goldman Sachs also benefited, with equities revenue up 7% to $3.17 billion. JP Morgan's equity market revenue saw 21% to $3 billion. Citigroup's increased 37% to $1.5 billion, and Wells Fargo surged 41% to $558 million. Executives highlighted the opportunities created by geopolitical and election uncertainties, which drove clients to reposition their portfolios. They expect continued strong performance in trading as clients navigate these uncertainties. Also on Follow the Money, BlackRock, the world's largest asset manager, reported a record $10.65 trillion in assets for the second quarter. This surge is attributed to rising stock markets and significant inflows into BlackRock's exchange-traded funds. The S&P 500 index jumped 4% during the quarter, boosting BlackRock's asset under management from $9.43 trillion a year ago and $10.5 trillion in the first quarter. The company also reported total net inflows of $81.57 billion, with $83 billion flowing into its ETFs. BlackRock's chairman and CEO, Larry Fink, highlighted the firm's bullish outlook on infrastructure and AI investment. He emphasized the growth potential in energy transition and AI data centers, anticipating continued strong performance in these sectors. Additionally, BlackRock is set to complete two major acquisitions in the second half of the year, strengthening its presence in infrastructure and private markets. The recent $3.2 billion deal to acquire Preqin and the $12.5 billion acquisition of Global Infrastructure Partners underscore BlackRock's strategy to move into higher margin, higher fee products. BlackRock's total revenue rose 8% to $4.81 billion, driven by an 8.6% increase in investment advisory fees and a 10% rise in technology services revenue from its Aladdin platform. Net income for the quarter was $1.50 billion or $9.99 per share. That's all for Follow the Money this week. Thank you for joining us. Join us again next week in the latest updates in the world of money. Back over to the studio for Trade of the Day.